Hello, everybody. It is the 24th of April, 2011, and welcome to the Silver Log. Going to enter a interesting weekend, to say the least, because it's now hitting a significant resistance level. Not only the 50 nominal psychological previous level from 1980, but even as well a Fibonacci upside target that I've been looking at for quite some time now. What Fibonacci upside happens to be, if you're new, is you take a specific range. And this range works even better when you look back into the late 1990s. It is from $4 and $8 using the calculations. They'll give you upside numbers up to infinity, really, but we won't go that far. First one was roughly around $10 and change, $10.40, I think. No resistance. So you were supposed to find resistance there, but you didn't. What's important to know is if you're at an area where you're supposed to find resistance and you find none or very little, expect a massive move to the next significant level. That's what happened. Same thing can be true with support. If you're trying to find support somewhere, it doesn't occur, it's going to go down to the next significant level. Now this area found resistance, came back down, and finally made it to this top, which was the 21 level, and the next significant Fibonacci level. The next one was 31. Now notice how long it took to go from 21 to 31. Market went through some serious corrections, not only through price, but again through time. It didn't find much resistance at this 31 level. It had a small pullback, and then it bursted through that level, and it has kept going towards this 48 level. No surprise this has happened. Anyone trying to pick tops in here? It's been a fool's game, especially when we've had confirmation going to here ever since pretty much back in here. So I don't know why people were trying to pick tops with this information of the Fibonacci. Also, if you're playing this game, especially in the bullion, or pretty much it's only the bullion or physical of some sort, scrap silver, same thing, because you know how currency is created. You know people are waking up to this, and you want to protect yourself. Well, congratulations, because it has been protecting yourself now for a little while, and the odds are on favor to continue to do so. Now what we're going to do is take a look at a couple of stocks, or a couple of charts. Which one of these two do you think is the price of silver? And what do you think the other one is? Well, the silver one's fairly easy. This is silver, because it's between 36 and 61. This one happens to be the second largest market cap stock that I at least know of, and that is Apple. AAPL. At one point, they traded around the same price, and then things have changed. More so, or mostly, it's this trend line that lasted from 2003 to 2008. 5 years. 5 years it stayed above this rate of ascent, and this is a major rate of ascent. In fact, since its bottom, it's been continuing to stay within that trend. Now, silver, it's been playing that trend now since the bottom, but for the most part, silver has done a lot of correcting through time. A lot. Just like there's no such thing as going up for too long or down for too long, I guess this is a case where there's no such thing as correcting through time for too long. Now, the largest market cap stock that I know of is Exxon, XOM, and this is Exxon right in here. And at one point, within just like Apple, it traded roughly around the same price as silver back in 1986. Only difference is silver had a big sell-off and then corrected through time pretty much forever. Whereas Exxon Mobil, I don't know, it's been in this nice little uptrend with really not that much in the way of correction. See, it's a different market. They didn't manipulate the Exxon market to the extent that they did within the silver market. Now, obviously, it's been in a major uptrend, but how much of this is just getting back what it corrected throughout this entire time frame? In fact, I would be very hard pressed to find many different stocks or indices that had a 1980 high that is currently lower than any level it has ever traded this decade. Because back in the 1980s or the 1970s, the highest level the Dow was at, I think, was 1,000. And now it's gotten up over 14,000. That's 14 times. For silver to be 14 times 50, well, that would be about 700 or so. Very interesting. The lower part, 125. That means the Dow's lowest level was like 500, and the lowest level silver had this decade was about 350. We'll say 375 to make the math easy, or 3 times higher. So if the low of the Dow was around 500 in the 70s, is it safe to say the lowest period of the Dow this decade is 1500? No. And the reason why it was manipulated, in my opinion, was to keep people clueless or asleep to what is really going on. How many people in here knew what the word bullion really meant? How many people even knew silver was priced at this level? And there must have been something fishy for the reasons why it was going lower. Not me. It's not like in school they talked much about gold and silver. And in fact, when I first bought my first ounce of silver, it was pretty much around this top here in 2008. I go to the coin store and I say to the dealer, I want to get silver. And he says, well, I got some bullion. What did I say to the dealer? What does bullion mean? And he asked me, but not many people even today would know what bullion means because, in my opinion, the powers that be have done a fantastic, spectacular job in keeping people clueless to what's going on. The final point I want to make is the corrections through time again. I talk a lot about that, and I'm not going to stop. It was a long time sideways correction after a long price down correction. And within the entire 30-plus year trend, I look at this as one log. Nominally, 35 or so year sideways correction through time with the range from $3 and change to 50. That's the range for the correction. Again, just knowing that we are below the levels from 1980 should bring alarm bells in your head, because within inflation, especially when you're looking at charts this long term, the equilibrium has got to be in some sort of uptrend. Now, what the rate of ascension is, then you need the rate of real inflation to get you that. But I look at this as, if people are seeing what's going on, they're finding out information for how money's created, all this type of stuff, they can't stop that. They can't stop people from waking up. And thus, I think they're running low on options, at least for the long term. They can try to do whatever they want with margin requirements and all this kind of stuff and have short-term pullbacks. But right now, that seems to be the most likely thing. Thank you for watching this, and have yourself a magnificent day. Bye-bye.